Welcome, everybody. I hope it's been a good Independence Day holiday. As always, I'm looking forward to our session. Markets open, and that means that there are things moving and trades to be analyzed and things to talk about. So I'm excited to see those of you who are here, and hopefully we'll get a few more coming in as we get things rolling. Um, Thank you, Dell, for giving me my audio and visual check. I really appreciate it. And along those lines, if you know, we like to operate in kind of an open mic format here, and I'd like to try to encourage as much participation from everybody as possible. And so, in that vein, if you have something to say and you're willing to share with the group, please feel free to turn on your microphone and go ahead and speak up. That way, we can all benefit from what you have to say, whether it's a question or a perspective or some experience that you've had. You can also use the questions panel as Dale did to give me my audio and visual check. And that's a panel in the GoToWebinar software that I watch throughout the course of the webinar. And we'll try to fold comments and questions in as we keep things moving. So with that in mind, everybody that is here so far is unmuted. How are you doing? How is the 4th of July holiday? Jay says it was relaxing, which is great. Also for me as well, which was nice. So, all right, and I hope it's been the same for the rest of you as well. We're going to have. I expect we'll have some time today to really dive into not only the stocks that I've been following throughout the last week that are open positions, but also to open things up and consider some things that you may be looking at as well. And so, be ready. We'll be looking for a lot of interaction. So, Barry, I think you and I have share some things in common. Uh, he says it was good until all the noise began. I guess I'm becoming that get off my lawn guy. I was telling one of my sons this week that the problem I have with July is, it's not even the big fireworks, the organized events that you see around the Fourth of July from cities and so on. Those are fun. I enjoy those. The things that get on my nerves are all of the neighborhood fireworks that go on till all hours of the day. And we have here in Utah, we have two holidays. There's the 4th of July, of course, and then a state holiday is on the 24th. And we call it Pioneer Day. And that's another day where there's typically fireworks involved. But that means that for a lot of people, the entire month is fireworks month. And so, yeah, Barry, I can relate very, very much with what you're saying. A lot of it happens right outside our bedroom window. So, all right. Well, it is, let's see, Barry, going on well past 1 a.m. and I had to get up at 5. Yeah, I have exactly the same issue. I don't want to be the grump, but I've got things to do, and they usually have to get done early in the morning. So yes, I can completely empathize with what you're saying. So, all right. Well, as I mentioned, it is the market's open. It is Friday. That means there are options that are expiring today, and I do have an open position to take a look at. Now, it is interesting. We looked at CVS earlier this week, and that is the trade that is set to expire today. Let me just switch over to my track record really quickly, show you the setup. I placed this trade after the first week of June in the second week, so this is about a 3-week trade. Selling the $59 strike price brought in $1.20 for about 2% for that period. This is a conservative position. I only sold one contract, so it's about a $5,900 cash maintenance requirement in my account. But as of now, as we can see, the stock has really picked up some bearish momentum in just this week. This is Monday, Tuesday, Wednesday, and then today, as we're down here at about 56.50 roughly, and picked up quite a bit of bearish momentum. So it's about $2.50 below the price that I was assigned at. Last week, the stock was right up here, just a little bit above 59, and we talked about the value of maybe looking for an opportunity to roll it and maybe close out the obligation early. And if your objective is to avoid the assignment, of course, hopefully then you would have closed out this position before today. As you know, I don't avoid assignments on these stocks. In a lot of cases, they give me opportunities to sell covered calls pretty quickly after an assignment, and so that's more than enough reason to justify taking those assignments for me. And also, I like being able to possibly bring in some dividends if I end up holding it long enough to cross that threshold. And so, as things stand, my intention here is to take that assignment, but it is $2.50 below the strike price that I sold, and it looks like it's picking up bearish momentum with I possibly near-term support probably down here, I don't know, 54.50 roughly. So still a couple dollars away. Is anybody else working with CVS as I am? And what are your thoughts about the possibility of taking an assignment at 59 on this? Is that something that would cause you some grief, some stress? Thank you, Jay. Your expiration date was last Friday. It was above my target. So you're in a much better position than I am. Congratulations, at least as far as relative to the stock's current price, right? Again, I don't consider myself to be in a really bad position. I'm okay with this. I like CVS. I have for a long time. And I think $59 is a good price. But what does Jay have over me on this position? And Jay, you get one of these tick marks here for that. Hi, Victoria. Glad you're here. The fact that Jay's trade expired worthless last week compared to mine? The nice thing about that is that whatever your cash reserve was, Jay, you got that back, right? So you're able to decide what you wanted to do next. Whereas mine is pretty much set, and I am going to be looking at an unrealized loss here. And Jay says, "Yep, I am going to be looking at an unrealized loss so far of about $2.50 as soon as I'm assigned." Now, again, that doesn't really bother me. You know that I'm in a number of stocks right now that are significantly below the prices that I was assigned at, because they're stocks I like. I'm taking those dividends in, and I still believe in their long-term prospects and the overall value proposition and fundamental strength of those companies. So those are all reasons to take the longer view here, in my opinion. But this is something. This is the kind of thing that does beg questions that need to be asked by all of us when we're acting as the seller on in the options market. These create obligations, especially when we're selling put options. To create obligations, we have to think about the practical reality of meeting those. Barry says, I brought in about half that difference with the premium. You're exactly right, Barry. In practical terms, my cost basis is a little bit below 58. So I'm just a little over $1 to the negative on a net basis. And that, thank you. I really appreciate you saying that, because, in practical terms, let's, just to kind of summarize what Barry is referring to, here's my assignment is 59, 50, 59, right? Income from my put sale was $1.20. So my net cost on this, again, unless it suddenly picks up $2.50 of bullish momentum in the next couple hours, I don't see it happening, but it's always possible. So my net cost in this is 57.80. I can type, there we go. So I am a little bit negative, but not by much. And that is the other reason put selling is nice. If I'm setting my value price, or the price that I'm willing to buy the stock at 59, for example, whatever I can bring in on that put sale gives me a lower net cost basis, which is really useful, and helps to buffer some of that difference. Now, it's also true that it doesn't always make up all of it, and even especially if a stock really drops into a very extended downward trend from where you're assigned, sometimes it drops much further than whatever income you can generate, even from covered calls, as the stock is going down sometimes, if you want to try to work that strategy. But those are effective, especially over time, at providing kind of a buffer and a range to think about that tends to minimize some of the emotion of seeing the stock in that downward trend, even if, excuse me just a second. I'm just going to take a look at a couple of stocks I have, and I'm going to show you a couple of examples of what I mean. Let's go over here to BorgWarner, in fact. So this is a stock that I was assigned. I was assigned at the beginning of the year at 35. So the stock was, excuse me just a moment. I apologize. My wife likes to let the dog run around, but he also likes to bark at neighbors. Okay. So I was assigned at the beginning of this year at 35, while the stock was up in this range, and obviously it's done quite a lot of back and forth here. More recently, came up here to 38. That gave me a really nice covered call trade but it's really dropped very sharply back off of that, and it's now well below that $35 strike price that I had originally been assigned at. That's a little bit of a little bit stomach churning, and it's been about a 6-month position. And the truth is, this is a stock. Being in the auto industry, it's cyclically sensitive, right? So if the economy is slowing down, that it may be a kind of a bearish thing for this company, and that means that this bearish trend could continue for a while. The I guess I could call it a silver lining, but the flip side of that potentially negative picture is that the stock is also giving me a number of useful income generating opportunities that have been pretty effective. And so let me just show you those. Okay, can everybody see that? Do I need to zoom in on it if it's not really clear? Thank you, Gib. Okay, so here is my original assignment at $35. Here are all of the premiums that I've been able to bring in. 60 cents on the initial assignment. In January, I had a nice covered call here at 35. It obviously expired. Another one in April at 60 cents, also expired. And then this most recent one, up around $37.50, $25, that also expired. All of those together, however, have given me net premiums of about $3.50. Now, BorgWarner does pay a dividend. It's a little bit, it's more modest than a lot of the stocks that we have we have been working with that are up around 3 to 4% right now. So this one is a lot more modest than that in terms of dividend, but it's still giving me about 22 cents. And that's useful. That's still effective. That increases the total income that I brought in over the period to $3.72, which brings my net cost basis down to $31.28. Now, with that information in mind, does the perception or the opinion about BorgWarner change? I'm going to throw, I want to throw this out to the group. Obviously, the stock is a little bit above that point, so it means that I'm overall net a little bit positive, but it's basically treading water. What do you think? Am I wasting time? Okay, Jay says just keep making those covered calls. Yeah, and that's kind of one of the things here is that as this downward trend really kind of continues, I mean, we could see it drop all the way down here below, a little bit below 30 in the 29.50 range. So there's definitely some more downside that is available there, right? That does bring up the possibility of using covered calls. I've tried to focus on covered calls at or near my assignment price, which is 35. The stock is obviously significantly below that right now. So those trades aren't going to be very productive. But if I was willing to be a little bit aggressive, I could start working with some covered calls around the at the money level, around 32, 32.50 maybe, depending on what's available. Let's go ahead and switch over to that, in fact, and let's take a look. Okay, 32.50. This is a stock that doesn't offer weekly options, so you really just need to work with whatever is available in the current month or possibly the next month. So 32.50 there. Here's 32.50 out for 42 days, a little over a month, is offering about an 85-cent premium. That's a little over 2% for a little bit less than 6 weeks. So that's not terrible. That's generally within the average 1.5% per month target that I would want. But it's also giving it 6 weeks to rally back up to 32.50. So I would need to be really, really attentive to what might happen between now and then if the stock finds support and starts to rally. Dale says it's good as long as you can sell good call premium. When the implied volatility goes down, maybe not so good as the dividend isn't great. So the dividend is kind of there. It's very modest. So this is not a primary reason to hold on to the stock, right? But I like what you're saying, Dale. There's, as long as there's opportunities to work with reasonable premiums. And Jay is saying a $30 put sale would be interesting. And so this is the other possibility. And I know, for example, we've heard our friend Ray talk about the possibility of being able to tier into positions, a little bit of, a couple of legs at a time, right? And that raises an interesting possibility because I do agree, this is 65 cents is available right now at 30. Again, not a recommendation to buy or sell, blah, 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 blah. Got to keep the coward's door swinging. But that's a little over 2% for, sorry, that is 65. That's also 6 weeks. So let's go ahead and switch this to 14, 32.50, which is about $1 here. So this is $1.25 on the put sale. Not great. Implied volatility here is kind of dropping on this stock. It's pretty low right now, so you're basically just getting the difference between the strike price and the stock's current price if you sell that. And that's a little bit, and that is in the money, which means there's a possibility you're going to take another assignment. That's not terrible if you like the idea of adding another leg at 32.50. Generally speaking, hello Raymond, how you doing? We're kind of talking about taking a page out of your book and using the legging in strategy on put sales and on stocks and downward trends right now. The problem with doing this on BorgWarner here is at 32.50 we're really only not quite 10% away from the price that I was assigned at, right? So 250 divided by 35, about 7%. I usually wait until there's a deeper discount, a deeper distance between the price that I was assigned at and the stock's current price. So usually 25 to 30%. So let's take 35 and we'll assume 25%. So I'll just multiply that by 0.75. So realistically speaking, probably the best opportunity, at least for me speaking for myself, this would become a little bit more practical if the stock drops down into that $26 range. But everybody's different. That is something, the caveat of course is that you need to make sure that you've started with a position size that's small enough that you're going to be able to absorb assignments at multiple additional prices and still have your position size be relatively conservative. That's why I like the idea of if you're planning say a 6% total possible position size for any one stock that you might work with, and I'm using this just to try to work with round numbers, it would be pretty simple to set a kind of a different kind of go in with a 2% allowance on the first leg. If it drops some more, go with another 2%, and then another 2% after that. That way, there's possibly up to 3 legs of the trade, and you may have taken in maybe 300 shares if you're working with an account like mine that way on a stock that you really like. Like I said, I think that relative to where I started on BorgWarner here, it's not quite down to that range yet where that's going to be as attractive as it could be. But again, there's lots of other ways that you can try to generate income on these that can help. So to me, no, I'm not wasting my time. This is a stock I like anyway, and it is going to give me. It is going to cycle back at some point. This is a good company. They've got really good fundamentals. The value proposition is really attractive, and there is going to be a point where the market recognizes that. So I'm willing to be patient in the meantime, and I'll simply look for opportunities to take some of these additional trades. In the meantime, I've got my net cost basis in the $31 range, and that does give me a little bit, that does improve my ability to sleep at night. I'm not gonna lie. That's, it makes this downward trend. It doesn't make me want to ignore it, but it certainly helps to minimize the emotion attached to it as well. So any other thoughts on what we're talking about? $30 put sale is interesting, and that does give you a little bit deeper discount, right? But you're still not quite 20%. So you've got to decide, Jay, if this one was going to be something, this is a little over 2% for about 6 weeks of time. You've got to decide if that would be enough, and the potential assignment at 30, if that would be attractive enough to make that trade. If I were to do that, I have the first assignment at 35, right? So if I were assigned at 30, my net assignment price would be $32.50, and then with whatever I bring in on my premiums, this one would put me a little over $4. So my net cost would be somewhere around 28 in that case. So again, it does, I'm not this completely dismissing this trade. I am just saying there's a little bit, there is quite a bit of time out to this one that would make it make it a little bit less attractive. So, okay. Let's go ahead and move on. Already talked about CVS, so again, I'm just going to go ahead and take that assignment and see where the stock goes. It is definitely below that $59 price though. So if you're in the same trade and you didn't beat me like if you didn't beat me on that trade like Jay did, then you have to decide what it is you want to do. Really, I don't have anything else coming up for a couple of weeks until the 19th. Then there's 3 different trades, 2 put sales and a covered call. Let's take a look at Tyson first of all. I sold the $55 strike on that one, brought in about 1.5%. This is for a 1 month trade. I placed this on June 20th. So been sitting in this ever since. And the stock is at 596. So $55. So about $1 above. Here's my assignment level with the stock following, with the stock following a lot of other stocks this week lower, picking up momentum, kind of like Borg Warner, right? With a couple of weeks to expiration yet. So far it looks okay, but with that bearish momentum and the 200-day moving average is at around 54, it looks like there is some possibility there that we could see it drop below that $55 price. Barry says TSN almost requires longer periods to get the nice premiums. That's not always true, but it is right now for sure. Okay, we already have Tyson, so here's our options chain.
Against the 150.
Sorry, Ray, I was talking over you. Go ahead.
Tyson's right up against the 150 moving average.
The 150? Interesting.
And if you draw a straight across from where it's at, you see that it got support also back in, what was that, the end of December? Yeah, there you go.
Yeah, we've got a really solid pivot right here. So looks like it should. That's also pretty consistent with the 200-day moving average as well. Pretty consistent with the 20-day moving average, I should say. There's a little bit of a convergence happening between that 150. So that's interesting. So we'll see how that goes.
I usually take those, if I'm going to take those, I usually take them like that because you get a good chance of a reversal. Only thing I wait for in that case would be is right now on the MACD, it's still not oversold.
Right. And it wouldn't be, it doesn't have enough movement over time, right? It's bent over, right? We've got the histogram is definitely turned downward, but until we start to see, some of these, it actually dips below the zero line.
That's where I'd take them, right at the bottom there. That way I'll take them.
Right. So that does mean there could be some downside. The fact that it, it's still above that zero line on the MACD. We'll see. But if all of that makes you want to say, well, maybe not here, again, for perspective on this trade, brought in 90 cents. The stock is above 55 right now. And so there's still a couple of weeks to expiration. If you wanted to minimize the potential of being assigned right now, here's, taking a page out of our friend Joe's book. I could buy it back probably for 40 cents, but the asking price is exactly 50% away from the premium I brought in when I sold the option. And that's nice. That might be an opportunity to go ahead and claim that, eliminate that potential obligation, and then decide what you want to do next. Here's 45 for the next week out. If you want to go another couple of weeks, you can get about 1% right now for 55 cents. So, whether or not you would want to continue to work with Tyson is another open question, or if you want to move on to something else, or possibly even be a little bit aggressive with the stock right around 56. This is the at the money strike price. Here's 95 cents with the stock just a little bit below that level. Well, it's actually right at it, excuse me. So there's 95 cents, which is interesting. 3 weeks, 80 cents. Could even get 65 at 56 right now for the same expiration. So if you see the stock showing any kind of indication of support, of continued support, possibly around this level, that might also be interesting to think about. Again, as always, not a recommendation, but different alternatives, different ways to look at things. So again, as always, my method here is going to be to keep an eye on it, let the stock do what it's going to do. This distance between the 200-day moving average and 20-day moving average, as we see the 20-day moving average flattening out here, I would consider this to be a bit of a kind of a trap zone. It's not a really big trap zone, again, since I'm sitting here at 55 and seeing it down at 54 isn't going to bother me with really strong support here at the 200-day moving average. But from where the stock is now, it could easily fill that distance. All right, any other thoughts on Tyson? Okay. The other put sale was on stock we used quite a bit last year, Suncor. SU is the symbol. I sold the $37 strike price. Again, about a 3-week trade here, selling July 19th. Stock was rallying very nicely as energy prices were going higher. It hit $39 here before the holiday weekend, and it's selling off pretty sharply today. So it's down about 37.92. So a little bit off of the high, and still about 93 cents above the strike price that I sold, which is right here. Now this one, I've only been in this trade for a couple of weeks. Excuse me, about 1 week. I apologize. A little over 1 week. And so this is one that may be interesting to see what we can do with. Again, for reference, 60 cents. Here is the bid price that I sold it at. Current asking price 33 cents. No volume, but a lot of open interest here. it might be interesting if you, again, if your objective is to avoid the assignment, you want to be a little bit more active about managing these trades. You know, it could be interesting to set a sell to close at around 31 or possibly 30. So hang on to that 50% mark that we were talking about earlier, and see if you get that. There's enough open interest that I think there's a pretty fair chance of that happening before the market closes, especially if the stock does continue to pick up that that bearish momentum today. If it continues to drop even further than where it is now. Other thoughts? Anybody else on this that is that's working with this trade? All right. The only other trade that is set to expire on the 19th is a covered call on Zion, which was set at 43. We've talked about some of these stocks in some of these banking stocks in other sessions. It was looking pretty good again before the holiday break, and is dropping down a little bit below 49.65, but looks like it's approaching what it should be pretty solid support here, as we're kind of seeing a very gradual taper on this upward trend for the past few months. So we'll see if that holds up. This is like a lot of banking stocks though, compared to, for example, BorgWarner, one that does pay an attractive dividend. So Barry got 50 cents on the same strike for the Suncor trade. But again, if that's enough to be useful for you for the time period that you're working with, Barry, you know, again, if that's enough, that's still a good trade. So this week's put sale was on Comcast. This was a recycle from the put sale that I placed at the beginning of June that expired last weekend. So I just put the stock right back in, didn't let that mule get a lot of rest, and sold the $37 strike price on that one. Holding right at about the same level it was at when I placed the trade. So that's where that one sits, with about 3 weeks to expiration on this one. So we'll see where that one goes. That'll be interesting to check up on next week and see where it's sitting. All right.
Did you look at NVIDIA yet?
We have not talked about NVIDIA in this session. We did talk a little bit about it last time, right? But here we are now. It's kind of consolidating for the last week or so. Between
I sold the 120. I sold the 120 put on that.
Okay.
For,
so you're
for August 2nd.
Okay. You did that today, or?
No, actually, I did it on I think the 2nd. No, the 3rd. Just the day before yesterday.
Okay, so it's a 1 month trade. How much did you bring in on it?
$5.05.
So that's a pretty good overall return, and you're sitting nicely in that trade right now, excuse me, as well, right?
Yeah, doing good right now on it.
And you said that you sold the August 2nd. We're going to need to expand our strikes. There we
It's
go.
not to 50% yet, though.
No, but you know, I mean, it's been one day. We can be a little bit patient,
Can't
right?
complain about that. Can't complain about that.
I mean, Monday could be a completely different story as far as NVIDIA goes, right? And if it breaks above this consolidation range we're seeing right now, you know, it starts to fill up some of this distance between 140 and 127.50, then you know you'll probably be in that 50% range. So
Yeah, it looks like the wick just went above that level of resistance. So if it continues, I'll be out of this trade pretty quick for a good profit.
right. He says I never received the alert on that one. I believe you're talking about the Comcast trade, but after some assistance from IT group, yep, I was able to log into the website and was able to view it. So the normal text alerts that we've been sending, we've discontinued those, but you should still get an email alert get an email from us when the post goes live. So you should just be able to watch for those, or as you mentioned, you know that I'm going to be posting on Tuesday before the market. Okay, you didn't get the email. I can look into that, Barry. Obviously, the trades are going to be posted. You know, I try to get them up before lunchtime, my time, usually as early as possible. But sometimes it's upwards to about 11 or 12 o'clock Utah time when I publish those. But certainly, if you just check the site before the market close, you should see those alerts. And you know, if you do it after the market on Tuesday, then you'll be like me and be looking for the trade on Wednesday, which is also not a terrible thing. So gives you the evening to take a look at the stock and decide if there's some other variation that might apply if enough price action has happened just in the hour since the post and whatever it's doing now to make a difference. So, but Barry, I will look into the emails because those email notifications should be going. All right. So there's NVIDIA. Ray's sitting nice on in this. So, you know, he does need to exercise a little bit of patience.
I also took some LOW, which is a pretty good deal right now. You know, if you're looking at long-term stuff.
Give me that symbol again.
Lowe's, LOW.
Gotcha. You broke up just a little bit in my headset. So really quick, Barry says he did get in on Comcast at 72 cents, which was a little bit lower, but not bad. So that's, you know, again, good. Like you say, you know, I'm doing that on purpose. So you actually, you did a little bit better than I did. I got in with 70 cents. So good job, Barry. Giving these out today. All right, go back to Lowe's here. Picking up some bearish momentum, but it's got pretty solid support right about where the stock is at, right?
Yep.
Right around 213.50, maybe 213, call it. You want to be conservative. If you want to give it a range, you can go really to the bottom of these pivot lows as well and trace it to 210. So, you know, a little bit of give between 213.50 and 210 where support could happen. But you said that you placed a trade on this one. 220?
I took the 1250. 212.50.
Oh, okay. Sorry. 212.50. So you're a little bit below this. And how far out in time?
I went to the 12th.
Oh, 1
July
week.
12th.
Well, there you go.
Yeah.
$1.89 on that one.
Well, I got a time. I got 276.
Okay. So again, a little over 1%, right? You did that this week?
Yeah. I got it on the 2nd, I think.
Okay. So that means about add another 2 days to that trade. You're talking about a 9-day trade when all is said and done, right? But 256 divided by 212.50, there's 1.2%. I mean, that's more than enough to be productive on a monthly basis, right? Not quite 52, obviously, but 9 days, 40 potential trades. 42% on an annualized basis. That's nothing to spit at for sure. That's a nice trade.
It's over my trading rules, 40%.
Right. And if the stock does hold that really strong support, especially if all of the other elements are there, the value proposition, you like the fundamentals, et cetera, if all of those are attractive, this is a good trade just based on the numbers, right? But if those other elements are in place, then Lowe's is another one of those companies that may fit in as one of those legacy stocks you might be willing to hold in your portfolio. So
I have the intrinsic value on that one at 221, so it's intrinsic right now, so not a
yep.
bad trade if you want to keep it as a legacy.
Yep. Barry says, I'm beginning to see the problem with Para. Well, just beware, folks. We're going to bring out the ugly stick here. And
Boy,
stock
I'm in that ugly stick. I have a lot of ugliness in that one.
Yeah. He says, I'm trying to stream shows while working out. I have to stop constantly and refresh it. It's a little bit comforting to find out I'm not the only one that has that experience with their streaming app, Barry. A little bit, not a ton, because considering the library they've got, the kind of content, some of the content they've got is really, really great. That app should really work a lot better than it does. But the stock is it's picking up some momentum as there's some speculation that they're going to be selling that streaming business. And
that's all I'm waiting for to get out of that mess.
Yeah, so we'll see where all of that settles, but this is one that's, yeah, it's definitely an ugly stick. For those of you who may not remember, I'm in it up in the 40s. So been sitting holding and expecting it to rebound and come back at some point. Again, fundamentals are better than what the stock chart is reflecting, but it just has continued to stay ugly. So at some point, if you decide that you've had enough and you're ready to move on, that's okay. And for me, that may be like waiting to see what comes out of any potential transactions that come up in the near term. So we'll see.
I'm in at 28, and I thought I was doing great.
Yeah, well, you're definitely better than me on that one, Ray. So this is and sometimes, you know, this Paramount is a good example of the kind of cautionary tale that sometimes we have with these kinds of trades. And so again, I'm not justifying or excusing anything here about this one. But sometimes you do need to understand that stocks can and do drop and fade into very extended downward trends. And Reddit aside, and that's kind of started this whole thing. You know, here's the downward trend over the last 4 years. And you expect that at some point a downward trend is going to end, you know, at some point there, but it just really hasn't. Again, I've continued to hold it because it still continues to pay a pretty useful dividend. Wow, I need to.
And I haven't heard that Buffett has sold his yet either, so.
Right.
But
And you
he'll
know,
probably get a special deal for his.
yeah, he is Buffett. You know, they've cut their dividend pretty significantly, but they paid a useful dividend for quite a long time. And again, the overall fundamentals on this one, they still continue to hold up. That's the continued irony. So, all right. Never signed in the upper 50s, but have been in it recently at 1350. He has an open put sale at 10. So Barry is way ahead of you and me, Ray, on this one. So, you know, I already gave you one, and here's another one. So that's good. That's nice.
I don't like this how it puts it anymore for this one. I have a full allotment.
Yeah, I'm as far in it as I'm going to be. So yeah, we'll see what happens. So all right, enough of that ugly stick. Any others? Got a few minutes left. All right. Well, everybody, thank you for your time. As always, I do appreciate it. I really enjoy these sessions, and I appreciate your comments, questions as you have them, and certainly your perspectives, whether it's on the same trades that I'm placing or other ones that you're following. Really makes a difference in the way this session goes every week. So thank you so much. Really do appreciate it. Hope you have a wonderful rest of the weekend. And as always, if you have questions between now and next week, make sure to email me at thomas@investive.co. I'll respond just as soon as I can. All right. Thanks, everyone.
Happy trading, everyone.
Thanks. Thanks, Victoria. Bye-bye.